Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jared and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
I've just made Jared laugh a lot, and everyone in the studio because of my poor throwing ability. Which is actually a great tangent to today's episode.
Okay.
Which is all about synergies, of which I just displayed a great lack, trying to throw a studio key to Cordy.
Sure.
And it is now lost forever under the sofa.
Yeah.
Yes, that's right, folks. The studio not only has the table that you can see if you're watching the video version, it also has not one, actually no, just one sofa and some other chairs.
Planters?
Many plants, none of which I'm sure are real. Planter. That's the thing, isn't it? What is a planter, though?
Oh.
Because that sounds like somebody who plants.
No, it must be the casing of the plant, right?
Yeah, no, I think it is, but it's an odd word.
It is an odd word.
We would say plant pot. I would say plant pot.
It's both a noun and a verb depending on sentence structure.
Yeah. It's like a German word. Der Planter, die Planterin.
But we digress.
We do.
Synergies.
Glanzer. Sorry, carry on. Synergies.
In one of the last episodes, we started opening up this really interesting conversation around the role that the cedent has in preparing data and the importance that they have to do that well as a part of the relationship they have with the brokers and the reinsurers. But it began to unlock this deeper idea of like this is a very synergistic relationship between these three parties, and we wanted to sort of spend a bit more time sort of picking apart like what those relationships look like, how they lean into each other, and what are both the historical roles that they've shared in that relationship, but also what that will continue to evolve into off the back of new data and
with more synergies.
And with more synergies. Maximum synergies.
I'm aiming for us to collectively say the word synergy. Are we counting synergy and synergies? Let's say synergy and derivations thereof exactly 50 times this episode.
Okay.
I don't know how many we've said it so far.
Hope there's a ticker on the bottom of your screen.
But yeah, if we go over, we've lost.
Yep. Oh, wow.
Yeah, and we can't go over.
This is high stakes.
And if we hit 49, well, there's no prizes for coming second. Exactly 50.
This is high stakes podcasting at its best.
Synergy. Oh, 3 more. just gone down like that.
But
right.
But in we go.
Yeah.
We talked about the role that data plays in this kind of relationship. But do you want to start back a bit more around the deeper relationship and how those synergies get put into place between these three parties, like around accessing capacity and the historical relationship of how brokers and reinsurers or cedents began that relationship?
Yeah, it's a funny question. I think just to pause in case we've got, and I hope we have, new listeners amongst us who may be more or less familiar with reinsurance than the general population. We have this funny word, cedent, right? We talk about these 3 key parties, the cedent, the broker, and the reinsurer. But what actually is a cedent, and how can we make it super to cede? I always laugh when we think about this because when Jared and I first started Supercede, we had to explain to investors what was a cedent. And it's not actually that easy a thing to define because the quick answer is, insurance companies, but it's not actually insurance companies. It's anybody involved in the act of ceding, which is from the Latin-y, Frenchy kind of word, cede, to give away risk. So basically anybody who gives away risk is a cedent. In the reinsurance world specifically, it means to buy reinsurance, which is then very confusing because you're mixing buying and selling.
You give it away, but you pay for the privilege of giving it away.
Exactly. Yeah. So you buy reinsurance by giving away your risk, which is gloriously exciting. Yeah. And that makes you a cedent. And then when we say brokers in this space, we're talking specifically about reinsurance brokers, which are often part of the same parent company as a broader broker group, which might also do other things like a consultancy or who knows what else. Yeah. In some cases, they've got MGAs and MGUs attached to them, all sorts. But a reinsurance broker would be the ones responsible for arranging the reinsurance, and then the reinsurer. That's a word that we're often switching between with underwriter, capital, capacity provider, But they're basically the ones selling the reinsurance, taking on the risk that has been ceded unto them.
Yeah.
For all those synergies.
Yeah. Assuming reinsurance.
Assuming.
Yeah.
Assuming what?
Risk.
Yeah.
You know what to say about assuming risk.
Indeed.
Okay, so you see this inherent structure where
assuming makes a cedent out of you and a reinsurer out of me. It kind of works.
That's going to be a T-shirt.
Yeah. Sorry.
I really want that to be a T-shirt now. Luckily, we know T-shirt people.
We do.
But if we think about that, sort of the origins of those relationships, then, and that the sort of very obvious synergy that's required is this recognition that you need to have a shared objective for how you sort of participate in this thing together. And we talked about on the earlier episode that there's this sort of dynamic because of how insurance and reinsurance works. If there are no claims, one party doesn't pay claims back and they only receive premium. But if there are claims, they might pay vastly more in the claims payment than they've received in premium. But that creates this dynamic where at any given moment, one party feels like they've sort of won more than the other, and this trade-off isn't inherently balanced. And I think that dynamic sits at the center of this, and why I think the word synergy matches, because you're not fully aligned, but you have to be sort of directionally aligned, or at least aligned in what you're hoping to accomplish through that. And this sort of, that's where I think the word synergy actually perfectly sums up what we're trying to do here, because it means that there is an imbalance, but in the aggregate, if we both are good behaviors.
I agree.
If we both behave well,
I assume so.
Everybody wins. But in a microclimate, not everybody does. Only one person seems to.
Yeah, and the way I often explain this to people who are curious about reinsurance, say my pets mostly. I don't have any pets, sadly. But the way I explain this idea is through the term hedging, right? This mutually beneficial arrangement where you're basically saying, we don't know what's going to happen in the future, so let's agree on a middle ground that's acceptable to us both. In this case, with reinsurance, the cedent is like, I don't want to pay a massive claim unexpectedly. I'd rather hedge and pay a known amount each year rather than pay the unexpected amount in the future. And the reinsurer is like, well, as much as I'd like to get a massive payout and not pay any claim, I'd rather hedge that I'm going to get this regular payment from my cedent that I know I can count on, rather than, who knows. And that kind of hedge, I don't know where the word comes from. I'll look that up for a future episode. Benefits all parties and creates lots of synergies.
Yeah. Do you see it as sort of symbiotic as well?
Ooh, we don't have a counter for symbiotic.
We do.
No, it completely is though, because
like the one sort of requires the other, but there's this mutual reliance and dependence.
The reinsurers as a proposition exist to provide a service for the insurers in many ways. And that is very useful to the insurers. But looking at it the other way around as well, the reinsurers depend on the insurers to originate, aggregate, and price risk for them.
Yeah.
It's all very well that reinsurers have got a great big pile of capital, but it would be quite painful for them to have to establish local entities, follow lots of local regulations, manage distribution relationships, sell, manage claims, manage policyholders, etc., all over the world. So actually there's this very symbiotic kind of, I'm trying to think of, there's like a hippo with a small bird on its back type scenario, or otherwise. Are reinsurers parasites? But this idea that effectively they provide a useful service in order to effectively, quite literally, piggyback on the industry's architecture, I guess, in some ways.
Well, and I think there's that sort of reflection of nature works a lot, because sometimes it's also this ability to pollinate into fields afar. If you have like this sort of like, if we want to grow businesses elsewhere, reinsurers are this sort of vehicle in which insurers can leverage balance sheet capital to sort of grow into new products or geographies or similar. And without them, it would be too burdensome or too risky, at least especially in the early years when you're setting up somewhere new, when you're still building out the sort of underwriting strategy and getting your pricing sort of where it's like optimized, etc. It's always like a journey on that in that pursuit, but there's still a process in which you have to. There's the growing pains early on, and you see this with new startups now, where the loss ratios for the first couple of years are oftentimes disproportionately large compared to what you'd expect for a business that's been running for 25 years. There's always going to be bad years, but the first few are always a bit hairier because you're still trying to win more customers and get, the pricing solidified. So I think reinsurers provide an invaluable resource in that sort of world. So it is that kind of, again, symbiotic and synergistic relationship that allows that to begin to happen.
Ooh, I've come up with a really weird analogy.
Analogy battle.
Reinsurers are like farmers.
Okay.
They help to grow insurers, which are kind of like livestock.
Okay.
I'm going to pick a cow for sake of argument. The cows then graze the grass. There's loads of grass.
Which are people.
Yeah. The farmer doesn't want to have to go and pick up all the grass himself, but the cow is able to take all the grass and turn it into milk and useful products for the farmer.
Yep.
That the farmer can then sell to the broader capital markets. Yep. It's one of those kind of relationships, right? So it's in the interest of the farmer to support, as you said, even the calves, because they will one day grow into cash cows.
But I think
works that in.
There's a strong
in my analogy there.
Strong economics reference. But I think it's a really good sort of descriptor, because you do get to, if you think about this industry with a bit more energy, you can begin to see that, like, you as someone who wants to start a small business and the ability to get, like, one, the infrastructure, when we talk about the role of insurance across society, the infrastructure that exists to power the streets and electricity for your building and the property that it's on and the loan to get, like, all of this begins to be possible through this very complex mechanism. And you and I go down to the shop and we get some milk or what have you. Like, there's been a huge chain from, like, grass grew from a thing all the way. And I think so much of this is the same within our industry, where yes, you have the very end, which looks like this sort of capital markets capacity that then gets deployed here. And then the end result is we can have protection, insurance protection against businesses and risks that we as individuals experience in our day-to-day lives through this sort of deep, nuanced and complex chain of parties contributing to the fact that this all works. Is it as efficient as it could be? Almost certainly not.
I was just wondering, my analogy, I was trying to figure out, actually then the original policy holders are the grass or the earth or the ground or something. Does the grass benefit from the cows? I guess they're only harvesting our money. The cow is eating our money. Yeah. Insurance is eating all our money, policyholders. Revolt. Demand better reinsurance. Better farming.
Yeah, we'd have to...
Is controlled, because there is that element of reinsurers feeding insurers with the capital they need in order to graze successfully. But it's make sure they don't overgraze.
Yeah. Well, and I think this is, if you think about the recognition of that chain is what's driving insurers to think about technology that supports their reinsurers, right? It's thinking about how they can improve the data that they send upstream. It's about how they improve data they send to their brokers. It's about how brokers and are able to sort of leverage technology to communicate more clearly and efficiently with both their clients and their trading partners, the reinsurers. Like, again, it's this recognition that everybody sits in a chain, and the more effective you are at contributing both down and up that chain only benefits the entirety of it, right? The efficiency of the whole process, of that whole supply chain or value chain in this case, is dependent on each party wanting to contribute more, but recognizing that that contribution isn't sort of self-supporting. It's more like the better you contribute to your partners, the more effective you become, and that will be a driver there. But I think historically we've looked at going, how do I leverage competitive advantages? Yeah. Like, and there's competitive advantages between parties, right? Between farmers. But the farmers who are most effective will be the ones who are able to leverage up and down their own chain as effectively as possible. That will be the differentiator, not like how you're able to isolate a little thing and not tell anyone else about it. It's how best do you share data, how best do you communicate, how best do you transfer information to the other parties in this process.
My analogy is crumbling though before my eyes. I try to extend it further because I was just looking at taking it further and thinking about, and then a farmer obviously wants the best cows, so they only choose the best cows to take to market, etc. Which is true, that's kind of working. But then I was like, but equally, the farmer or the reinsurer might want to be able to select lots of different cows from lots of different fields, partly so that if all the cows in one field get infected with a disease or something, they know that they're not fully exposed to all. And we don't have a scenario in the reinsurance market where you have one farmer and loads of cows. Actually, you have tons of different farmers for any one cow.
But the saving grace...
maybe the insurers are the grass.
The saving grace is, as a farmer, you can just keep digging this analogy hole deeper and deeper. Just keep digging.
Yeah.
A tangent of an episode, but that's all we have for you today. We're running out of time.
We are. But we might not have said synergy enough times, so...
3 more on the way out.
Just think about, as you listen to the end of this podcast, how you can add more synergies to your day.
Yeah, perfect. Until next time, everyone. Thank you so much.
You've been listening to the Synergy Podcast.